Hey guys, this is Mark Shawson, the Pattern Trader. Recently, Mal posted this testimonial on our review website. So I'd just like to give a shout out to Mal and read his what he had to say. So Mal says, Mark Shawson has vast experience in trading. He shares his wealth of knowledge with all his students and others. He wants people to learn to trade the way he does, and so he describes every thought he has about the markets and teaches us how to apply his ideas. To help us get trading into profit, he shares his trades that are very likely to make a profit. So not only do I get an education, Mark shows me how to pay for it. A win-win in my opinion. You may have an alternative tutor promising much, but I'll wager not as much as Mark Shawson. So Mal, thank you a ton for those very kind words, those very nice words. So we are about 6 days out of the probably one of the most consequential elections in U.S. history, or at least so we're being told. And based on what the markets are, saying, I believe that that's going to be the case. In the background, we have a lot of divisiveness within the United States. We have a lot of chaos leading into the elections. We have the background of rising COVID cases. The highest case count since the beginning, actually exceeding the March totals we had many months ago. So we're seeing an escalation there, and you're seeing all kinds of rhetoric on both sides. Now, again, people are already going to the polls. There's already early voting, and so there's already some insight into how this may turn out. But we're not going to fully know the outcome until November 3rd. And possibly way beyond that, because one of the contenders or both of the contenders said they may contest the outcome based on these mail-in ballots. So this could be dragged out for a long time. But the markets are already speaking. The markets are already picking a direction, and this again, amplifies my trading beliefs, my trading philosophy, that the markets are a discounting mechanism. That while we may not know the outcome of certain events, the markets start picking a direction. The markets start pointing to the outcome of those events long before they're disclosed. And really what I'm talking about today is that I'm seeing some gigantic bear price patterns forming in two of the major asset categories, U.S. stocks and precious metals, most notably gold. And so I have been alerting our members to the presence of these bearish price patterns in the stock market. And now it seems like it's playing out. And if it fully plays out, we could really have a doozy on our hands. In a moment, I'm going to go to the real-time charts and show you the consequences of the trading patterns that I'm looking at. And if I'm what I'm looking at, we are going to have a substantial bear market in stocks. And I think that also goes the same for gold. So they may not, always go in tandem. The underlying reasons that, drive gold may be different than stocks. But, I kind of, depart from all of that. I don't look at all of the, kind of noise around the markets. I only look at the price action. And I've been telling our members for some time that I think gold is going to retrace back to that $1,750 price level. And in a moment, I'm going to go to the real-time charts and show you what I'm looking at in stocks and gold. And so we're seeing the beginnings of what looks like an asset crash. The early indications is that Biden is likely to prevail in the November contest. And now what everybody is focusing on is, will the Senate also fall, which could result in a total collapse of the Republican Party, total blue wave. And to my mind, again, I shouldn't say to my mind, this is not really an opinion, based on experience, government works best when there are checks and balances, when you have the Senate controlled by one party and the presidency controlled by another party. But, if we have a singular unitary kind of executive where we have a run of everything on one side, the market's already saying they probably don't like that outcome. So again, the markets are already voting. ahead of the outcome of the November election. So with that said, let me go to the real-time charts, show you what I'm looking at, and to my mind, a picture says it all. So just again to reiterate my trading philosophy, to my mind, price action is ahead of the news, ahead of the outcome. And next week, we're going to have one of the most consequential elections, one of the most consequential outcomes. But to my mind, the market started picking a direction several weeks ago as to what the consequences of the elections are going to bring with it. So in this particular chart, I'm looking at the weekly chart of the Nasdaq. This is the proxy for the tech sector in the United States. It's one of the biggest stock indexes in the world. And what I'm showing you and revealing is that the Nasdaq has been trading within the boundaries of this ascending, broadening price pattern for quite some time. Now, an ascending, broadening price pattern is actually a bearish price pattern. It signals a giant reversal. Now, you can see that a few weeks ago, the Nasdaq did sneak out above the resistance line of this ascending, broadening price action. But we have formed a very foreboding double top price pattern. Double top is just what it sounds like. We go to one all-time high, move off the high, retest the high, and now if we come through the neckline, which just is a hair below where we are, this will effectively confirm this M top or double top reversal pattern. And a reversal is exactly what it sounds like. The market trading up into this pattern is going up, and then a reversal would mean that the prices would come lower once that pattern is confirmed. So a lot of things could happen right here. We could bounce off this upper resistance line, and this could form another level of support, and we could head all the way higher again. But if we start trading back within the boundaries of this ascending, broadening price pattern, I think that would again be a very bad and ominous sign for the stock market. Now I just want to shift time frames to show you how real this double top is starting to look. So this is the Nasdaq on a daily chart time frame. This means that each one of these price bars represents one 24-hour trading session, and you can see now the presence of this large M top. Again, when you reach a peak, you retest the peak, and if we should come through this neckline, which is simply a line that confirms the pattern around 10,500 in the Nasdaq, this would then form a giant double top price pattern, which indicates that the future price trajectory is going to be lower, and perhaps considerably lower. In this chart, I'm looking at the S&P 500 stock index. I'm going to start by looking at the weekly chart, and you can see the same kind of ominous price signals starting right here at the apex, a double top price pattern at the 3,600 level in the S&P 500. But it is also within the context of this very large and long-term reverse symmetrical triangle. Now, this symmetrical triangle, reverse symmetrical triangle, is also called a megaphone top because it looks just like a megaphone that one of these coaches would yell at through the sidelines. And again, with the word top in it, this is very ominous and has very ominous implications, meaning that we could go all the way back to the bottom of this thing, and if that was the case, then we could go considerably lower. Now, I will, say that this megaphone top also revealed itself in late 1929, just before one of the biggest stock crashes we've seen. So it's yet to be seen if history repeats itself. Now, just one caveat here. While I do see structure and I do see ominous signs, ultimately I do defer to the market. So if the market starts complying with what I'm looking at, then I will look at it one way. On the other hand, if the market starts going the other way, the market is always right. So we do have the potential right now for what looks like a very, very bear market, the beginnings of a big, bad bear market. But ultimately, the market will reveal itself. can anticipate that next week's outcome is going to bring with it, huge and explosive price action. I'm going to be watching this very carefully. But to my mind, I want to see if the integrity of this bear pattern holds up, meaning we crash through here, perhaps we come back, and then we start going back lower, or does it look like we're going to keep going consistent with the long-term uptrend that's been inherent in this market. So to me, the market always rules, and I will be watching the market within the boundaries of these price patterns and price action. In this chart, I'm looking at the Dow Jones Industrials. This is a weekly chart, and what's noticeable about the Dow Jones Industrials is that it never exceeded its January high. So while the S&P and the Nasdaq easily surpassed its prior January highs, the Dow Jones never got or made a new all-time high. So this also could be considered somewhat of a bearish divergence, where two indexes go to a new high, but it's not confirmed by the third. And so we have the implications of a bearish divergence. And just like the Nasdaq and the S&P, we do see the beginnings of a double top price pattern, also like the S&P, within the context of this long-term reverse symmetrical triangle or megaphone top, which once again looks just like one of those things that you see a coach yell at through the sidelines, those huge megaphones. And with the word top in it, this also projects that this could also turn out to be a massive omen going forward for long investors in the stock market if they don't heed the warnings that are being yelled at by the current price action. You can see that right now we're at or near the neckline of this double top price pattern, where prices went to a high, backed off, have now re-challenged the high, and now looking like we're going through this neckline. And to my mind, that would start confirming the bear pattern, the double top bear pattern, within the context of this larger reverse symmetrical triangle or megaphone top. So right now the market is starting to flashing some early warning signs ahead of the outcome of the election. Now, the other asset class that I referenced in my video was gold. In this case, I'm looking at the ticker symbol XAUUSD. This is the ticker for spot gold. This is a weekly chart, and gold, like stocks, have made a huge rise throughout the duration of the pandemic year we've had. But it also looks like gold prices have started to peter out a few weeks ago and have formed this perfect symmetrical triangle at the top. Now, symmetrical triangle is somewhat of a neutral triangle. It could be just a consolidation before prices go in the direction that it came from, or it could be a reversal price pattern. And the harder I look at this, when we flip to the daily, I am starting to get the feeling that we are going to retrace to a prior breakout area. So we had a breakout area above all of these tops around $1,750. And whether we go higher in the future, I do think that it's increasingly likely that gold is going to careen back down to these 1750 lows before it either goes back in the direction it came from or it keeps going lower. So we are at a major inflection point within this symmetrical triangle. You can see that we're at now what I call the business end of the symmetrical triangle, that it's very mature. Prices have kind of ebbed and flows within the support and resistance line of the symmetrical triangle, and now it's going to pick a direction one way or another. And now I'm going to flip to the daily charts, and I'm going to show you why, to my mind, we're likely to go lower. Now I'm looking at prices of XAU USD spot gold on a daily time frame. And now we can see the symmetrical triangle on the weekly charts is also present on the daily charts. So we have this symmetrical triangle, but to my mind, on the daily charts, this looks more to me like a descending wedge triangle, where we have a common low around the $1,850 area, And then we have this phenomenon of lower highs. So we made a high around the $2,100 area a few weeks ago, and since then this has started to tire. It means that every thrust higher has been followed by a lower high. So that this is what's formed this descending triangle where we're going down in this sawtooth pattern, lower and lower, and eventually if we re-challenge this 1850 area again, I anticipate that we're going to bust through the lower levels of support and careen back to 1750. So I'm going to look very closely how we play here. So descending triangles need to touch the support level several times before they break through and go lower. And so if after today's very decisive bearish action, we start to get some traction and we kind of don't quite make it to the low, then I will know that that is a potential trap and will not be, follow this thing lower. But it is my inclination that we are going to careen toward this 1850 level, perhaps bounce off here, and then ultimately cave back down to this prior support area around 1750 or lower. So right now, what we have in the markets with today's price action is the beginnings of what looks like a general asset crash. And while this could be, bad for most investors are long, certainly in the stock market, positioned through 401ks and mutual funds, and just through conditioning. If we have a major shift in, the political environment, then we could have a cascading of prices and a whole host of investors who are going to be caught off balance. But hopefully you and I will not be. And the great thing is, markets fall much faster than they go up. Gravity does work, and that you're positioned correctly, you can make a lot of money in these kind of environments. So this is not meant to be, some kind of, ominous message to, scare you out of trading or investing. It's just the opposite. To my mind, the markets are setting up for what I think was going to be a phenomenal opportunity going, forward, from November onwards. So I hope you got a ton of value from this information. And with that said, I wish you a healthy and prosperous trading week, and I'll see you next time.